The second quarter of 2016 was moving along in pretty boring fashion with the major indices mostly running in place. That all changed on Thursday, June 23rd. By a narrow margin, voters in the United Kingdom voted to leave the European Union. The trading days that followed reflected the surprise outcome across the globe as major indices sold off sharply, with the S&P 500 index dropping 6% over a two-day period. This was far better than the 10% decline in international shares. As cooler heads prevailed and the various Brexit scenarios digested, many came to the conclusion an actual departure from the European Union would likely take years and the global impact would be minimal. As a result, after 2 harsh days of selling, investors began buying stocks again, and for 3 days, markets rallied, erasing nearly all the Brexit-related declines. When it was all said and done, the S&P 500 index gained 2.5% for the quarter and is up 3.8% for the year. Value shares performed the best, with large-cap value stocks gaining 6.3% for the year, and small-cap value stocks are up 6.1%. Technology shares and international shares have been hit the hardest and are now down 3.3% and 4.4% respectively. So what can you expect going forward? Since the uncertainties surrounding the Brexit situation make a near-term Federal Reserve interest rate hike very unlikely, good economic news should now stimulate renewed buying in stocks. We believe the Brexit-related selling could have been just the washout needed to propel the S&P 500 index to the 2,200 level. This would mean the S&P 500 index has another 4 to 5% upside from current levels, with much back and forth along the way. Over the coming months, you will hear wildly differing views on the impact of Brexit. All the talk about Brexit causing a recession in the United States is nothing more than speculation, as conventional signs that normally predict a recession are simply not present today. Investors would be wise to focus on the U.S. economy as a guide to where stock prices may be headed. It is important to note the U.S. economy is solid and getting stronger. Consumer confidence is high. Gas prices are low, and interest rates are at historic lows. From the entire HM Capital Management team, thank you for watching.